Okay, welcome back. 24 points lower, 17,991. One big swing from the high point of the day from 18,140 and, holding that around that 18,000 level so far. So that's what things are looking like. Market breadth is still positive, almost full 3:1 in favor of advances. So broader markets are stable as well. PNB Housing is the next company that we're speaking with. Now, since Q2 of FY20, the company's assets under management have fallen by more than 23,700 crores. Their loan book in second quarter of FY23 recorded the best growth in 14 quarters, up 2.7% quarter on quarter. Of course, they got a new man at the top as well. Girish Kousgi, Managing Director and CEO at the company, now joins us. Mr. Kousgi, great to have you back on the program. Thank you very much for your time. How are efforts to kind of accelerate growth at PNB Housing going? Because this is a time where interest rates, of course, have moved up quite a bit. There is, of course, twofold impact, right? There is impact for consumers, sentiment-wise, and second for players like you who are not banks. So just tell us, what's happening at PNB since the last time we spoke?
Good morning, Prashant. I think if you look at the industry after COVID from 2020 October, I think market is doing very well. It came back quite strongly, and that is continuing. To say that the entire housing finance industry is in sweet spot, and same thing is true for every single company, including PNB Housing, going forward. Now, after the last our engagement after quarter two results, I had mentioned that plan for PNB Housing in terms of growth and also in terms of margins. I think the story is pretty strong. We're going to focus largely on retail. And all the companies have to do now is to just ensure that they focus on basics, try to capture the opportunity what is there available in the market. And I'm sure every company will do well. This will ensure that there would be growth in disbursements. I had mentioned that starting from next year onwards, the growth in disbursement is going to be in the range of 22 to 25%, and the book growth would be about 17 to 18%. In terms of margins, I had mentioned after quarter two results that a spread of 2.2 and a NIM of 3.2, at least for next few quarters. So I think the story is quite strong. Demand is back. Economic activity is completely, up and running in the country. In terms of interest rate hike, I think, you spoke about that. If you look at the rates probably 4 years back, I think rates are much higher than what it is today. I think once COVID started, rates started coming down and it saw the bottom and the rates went as low as 6.75 in terms of offering, and then rates started moving up. So whenever the rate goes up, I think for some time there'll be a little bit of impact, but that is short term. After that, I think market will adjust, customers will adjust, and then it will come back to normalcy. And I'm sure this will also, going forward, will enable growth.
Okay. You've also started an affordable housing segment called Roshni, and last time we spoke with you, you had indicated that 25% of your business will come from the affordable housing segment. Can you tell us how it's doing so far and what kind of growth are you hoping to see?
In fact, last time also I mentioned we've just started. I think it will kickstart in quarter 4 of this year. Okay. And I think going forward, incrementally, contribution from affordable or Roshni is going to contribute about 25%.
Okay. Right. All right, got that. So can you tell us a little bit, what is the, say, incremental cost of funds versus what the cost of funds were earlier? What are you looking at for a target by the end of FY23?
I think I'll not be able to share specific details because of we have filed DLOF. So I think generally if you talk about the industry, I think rates had, I think it's almost peaked. And we could see that with the last repo increase as well. I think earlier the increase used to be about 0.5. I think this time it was less than 0.5. I think it is almost peaked. Maybe we might see one more increase, maybe 0.25 to 0.3. I think all the companies have aligned to that, and most of the companies have passed on the rate increase to the customers because the general trend is that the rates were increasing, and therefore typically most of the companies would not get impacted by rate highs because they would be able to maintain margins since they have passed on to the customers.
It's interesting that you've started, the affordable loan segment at a time when all the other competitors, etc., are looking to move to the mid and higher segment category. This also at a time when the rundown in your loan book has been, lower, 11 quarters in a row for the AUM. Can you give us a sense of how long is this rundown likely to continue? What's your outlook here?
Yeah, in fact, I had mentioned last time that we are going to grow from next year onwards, which means that the rundown will get arrested and there'll be growth in book and disbursement as well, number one. Number two, in terms of if you look at any company, you take the largest bank, the largest HFC, mid-size HFC or the bank, any company, I think they're predominantly into top, three segments. One is super prime, and affordable income based. So no, you can't say that there is a company which is not into affordable. Every single institution today, they are into affordable. Maybe the mix could be different. So affordable is something, where the growth is very, very high. And every single, whether it is bank or HFC or NBFC are getting into affordable space. And I think it has got a lot of potential to be seen in future. So, which is why all the companies are getting into it. Yeah, with respect to PNB housing, not that we were not doing affordable, we were doing affordable, but the mix was quite low. I think going forward, we want to increase that share because we see a lot of potential in that segment.
In terms of vision, I think you said that you hope to hit the 1 lakh crore loan book mark. I mean, organizationally, Mr. Kosgi, are you having to make any changes or, I mean, it's at the end of the day a customer-facing business, right? Or is everything on track? As you said, you began by saying just focus on the basics. I mean, so organizationally, it's all set?
See, it's all set. Last time also I had mentioned, I'll just repeat for the benefit of our viewers. So what I had said was when I said we should focus on basics, I was talking about the profile mix, I think more skewed towards salaried going forward vis-a-vis compared to self-employed. In terms of product, more skewed towards home vis-a-vis compared to non-home. In terms of segments, we'll be more focused on retail, both on prime business and affordable. We would, as of now, we are degrowing a corporate book. After a few quarters, once we bring down NPA to comfortable level, we will restart in a totally different format. I think going forward, corporate, within the overall portfolio would be about less than 10%.
Just quickly before we let you go, Mr. Kosgi, are you acquiring any talent from Canfin Homes into PNB Housing?
See, PNB Housing is a top-class housing finance company in the country. So, as our hiring strategy, we do hire from all the banks, be it large, mid-size, small banks, institutions, which is NBFC and HFC. And if it so happens that we were able to get a couple of them from the company you mentioned, I think we would be open to it.
All right. Thanks a lot for joining in and all the best. That's PNB Housing Finance. For the market,